Assalamu alaikum. This is the second lecture of our Financial Market and Institution course of MBA Major Finance. Today we will be learning about the roles of different financial markets and institutions. In our last class we have discussed about some basic ideas of financial markets, different kinds of financial market, and also we have learned some financial institutions which play a significant role in our financial markets. Today we will learn about some financial institutions having significant values in our financial market. So in the very beginning we need to talk about our commercial banks, which have mostly played a very significant role in our economy. So therefore we usually know their commercial role is to accept deposits from the public and extend loans to individuals, small businesses and corporations as well. So as the secondary role, they offer various kinds of financial services like foreign exchange, investment advice, wealth management as well. So their basically first role is to accept deposits from the public and giving loans to individuals or businesses. And the second role they play as an advisor of investment, wealth management, foreign exchange. It can also be tax advisors for corporate houses also. So their role in accepting deposits and making loans, providing credit to business and individuals is the basic primary role. They also can facilitate to payment systems and managing transaction accounts for various universities, for various services as well. We can also, in this age, we can also do mobile transactions with banks, with bank accounts. So it's very much easy for us to deal in any kind of transactions. They also offer wealth management services, for example savings and investment products for individuals, or it can also be corporations. The second point is the investment banks that we need to discuss, which assist companies in capital raising activities such as IPOs. We can say IPOs mean initial public offerings for companies who want to get money or take money from the publics by offering shares, by issuing shares actually. And investment banks can also assist companies in bond issuance. But their secondary role is to engage in mergers and acquisitions advisory. They can advise us whether to merge an acquisition with other companies. They can also help us in asset management and also property trading. The third company that we must discuss about is the insurance companies, which offer risk management services. So we are talking about insurance companies which usually offers risk management service by underwriting various types of insurance policies. Their secondary role is to invest the collected premiums in bonds, stocks and other financial instruments to earn a return. Basically, they invest the collected premiums in the bonds, stocks and the other financial instruments to earn a return, managing those risks through the sale of insurance policies covering various aspects from life and health to property and casualty as well. Insurance companies usually handles the investment of policyholders' funds, and they try to invest those funds in various assets including stocks, bonds and real estate as well. Utilizing actuarial services to assess and price risks accurately is one of their secondary roles. So let's talk about mutual funds. Mutual funds usually aggregate funds from individual investors to create a diversified investment portfolio. They try to provide liquidity and professional management services to investors as well as their secondary role. So in this we have discussed 4 major financial institutions in our economy, yet we can also mention some other institutions as well, such as hedge funds usually aim to generate high returns by employing a variety of investment strategies by cutting risks, by minimizing risks and increasing the returns. Their secondary role is to engage in some kind of complex financial activities like risk arbitrage, short selling, and leverage system. So we can compare between commercial primary banks. They usually serve retail customers, whereas investment banks focus on institutional and corporate clients. Insurance companies usually specialize in risk mitigation, while mutual funds and hedge funds aim for asset growth. On the other hand, regulatory oversight varies significantly, with commercial banks being subject to the most stringent regulations due to their role in the economy. So we can mention some other basic financial institutions which are central banks of any country. For US it can be Federal Reserve Bank, Fed, and for Bangladesh it is Bangladesh Bank, right? These are central banks of any country. Is very much important to control that banking system overall. And we already discussed about commercial banks, credit unions. In our country we can say it can investment banks or credit unions are very much non-profit financial institution providing traditional banking services, and is created, owned, and operated by its members only, none else. We can also give example of savings and loan associations in a country, which provide individual consumers with checking accounts, personal loans, and home mortgages as well. We have already discussed about investment banks, which are financial institutions that provide services and act as an intermediary in complex transactions, like a startup in preparing IPO, or when one company is merging with another. We also discussed about mergers and acquisitions as well. They can also act as a broker or financial advisor for large institutional clients such as pension funds. Brokerage firms are also a kind of financial institutions which assist individuals and institutions in buying and selling securities among available investors. So insurance companies and mortgage companies are also very crucial financial institutions in the economy, which needs to be focused on, and we rely on those institutions as a market. So let's move on to our next topic, which is global expansion by financial institutions. To discuss about the global expansion, we must see 3 major topics that need to be discussed before expanding our financial institutions globally. First of all, we need to talk about our motivations. What do we want? What do we need regarding the expansion? Do we need diversification, or do we need market penetration, or do we need regulatory arbitrage? So if we want market penetration, we usually target to acquire new customers and expand our market share in a different market or different setting. If we want to diversify our financial institution, we usually try to mitigate our risks by spreading investments across geographies, meaning across different countries, so that our risks can be mitigated. But if we want to focus on regulatory arbitrage, then we need to exploit differences in regulatory environments between countries, and we can invest or we can move or expand our institution in that separate specific country where regulations are not that much stringent or not that much relaxed, whichever we seem to fit perfect for us. So the second point would be, after determining our motivation, we need to move on to our strategies, how to focus on our motivation and complete that motivation with our perfect strategies. So first one we need to talk about, which is merger and acquisition. Acquiring or merging with existing financial institutions in the target market will be a great push towards our goal. If we want to penetrate our new market, we can invest or we can merge with an existing financial institution in that target market or in the target country. It can also come to us that we can go for joint ventures, forming partnerships with local firms to share both risks and reward as well, so that we won't be tied up in a new setting with much risk that we didn't anticipate. Another new strategy can be greenfield investments, which usually says that we need to establish our new branches and subsidiaries from the ground up, from the scratch actually, that in a new setting, in a new market, we will build our financial institution, build our branch or any subsidiary from its scratch, from ground to top. So to achieve our focus, to achieve our motivations, to achieve our targets, we need to form strategies, and after forming the strategy, we need to implement that. So when we will implement our strategies, we will face some major challenges. The first challenge could be cultural barriers per se. Cultural barriers which need to be understood and adapt to local customs, languages and business practices. Otherwise, our institution can be developed, can be successful in that new setting. Otherwise, if we do not adapt with the local customs, local principles, local code of conduct, languages and other practices as well. Another challenge can be regulatory hurdles. From country to country, regulations vary. In one country, the regulation can be very, very relaxed, but in another one, it can be very, very stringent. We don't know. So before implementing our strategies, we need to learn about the regulations of that specific country which we target. So different countries have unique regulatory frameworks that we have already understood that can be complex to navigate. So we need to take certain measures and assists, suggestions to face those regulatory challenges. Another major challenge can be the exchange rate risk, which fluctuates very, very often from country to country. It fluctuates in currency values, which can impact the profitability of overseas operations. So when we will try to expand our financial institution, we need to first focus and try to make our target very, very strong, and then we need to implement strategies based on the motivations, and along with the strategies we made, we need to consider the challenges we would face, and after implementing these strategies, we'll also continuously face several challenges, and we need to tackle those challenges with proper steps and measures. So let's So here's a case study of HSBC's Asian expansion, and we have given a real life case example to learn about the expansion strategy, the challenges, and how they have managed to tackle those. And we'll just summarize the whole case for your ease, and you need to study the case study for the exam. HSBC usually tried to expand their business in the Asian market, they leveraged their expertise in international banking to establish a strong presence in Asia, particularly in emerging markets like China and India. So the challenges they have faced was the very, very complex regulatory environments. And from UK to US, the culture barriers are quite different in China and India. So they were very much, they faced very, very difficult situation while establishing their business in the local market, they have completely adopted the local business cultures and as well the regulatory environments. So finally, HSBC has successfully positioned itself as a leading international bank in Asia, capturing a significant market share in China and India. So try to study the case study. It is very, very interesting. Another case study has been given, which is the Goldman Sachs European endeavors established in 21st century. So here you can also study the case, and here is this summarized view of this case study, where Goldman Sachs used mergers and acquisitions as a quick way to penetrate the European market, acquiring local financial firms. And they had to adapt the European financial regulations, which differ substantially from those in the United States. Their culture was quite similar, yet the regulatory environment is very, very diverse. So the outcome that Goldman Sachs has become a dominant player in European investment banking, offering a wide range of financial services in the market. So that's all for today. Hopefully we'll see you in the next class, inshallah. Assalamu alaikum wa rahmatullah.